You can tell by the... Good evening, everyone. Zac and Michael here, ready to chat all things market related.
Very excited. The market is bonkers. We're going to be talking about buying in this market, selling in the market, and our predictions for 2022.
Beautiful. So, Michael.
Good evening, Zac.
Good evening. Yeah, I'm good. How about you?
Doing well.
That's beautiful, mate. So, look, I'll jump straight into it. If I was a buyer just now entering the market, what's going on in the Northern Beaches?
It's been a really interesting year. And look, we're not at the end of the year yet, but reflecting from it, when we think about at the start of 2020, when all the COVID debacle hit, how that all progressed, and then this year as well with all the growth that we've had, it's been really interesting and really daunting, especially for a lot of buyers as well, where you've thought, maybe should I jump into the market, or maybe it's too hot, I should wait for it to cool off a bit. And for a lot of suburbs, we've seen 50% growth with houses, 30% growth with units. Like, it's been a really, really big year. So today what we want to talk about is, obviously the market's crash hot at the moment, and we're going to talk about if you're buying in this market, what you can do as a buyer, if you're selling in this market, what you can do as a seller. And also, we're just going to discuss basically a bit of information about what we think also might lead on next year as well. But in regards to buying in the market, a lot of buyers at the moment, especially if you're jumping fresh into the market as well, it can be really scary. We go, what do I actually need to do? All I'm seeing is all these properties selling crazy over guides, and basically where you go, how do I jump in, and am I doing the right thing here? So, and the nice thing is Zac and I speak with a lot of buyers every single day, and we're sort of coaching a lot of people through it also. And one big thing I've found is you've got to make sure, first of all, you've got to have some good people in your corner. So
100%. Whether it's your mum, your dad who've bought before, whether it's a friend or a cousin Johnny around the corner, broker, chatting to your neighbours, brokers, solicitors, all the trusted people in your community, just reach out and literally pick their brains about anything that you might be curious or a little bit unfamiliar with. Yeah,
exactly. So you've got to have some good people in your corner first, make sure you're well versed in it. And then the second thing is, when you're looking at a property, the key is you want to be well researched. So what I'm finding is, and from the discussions I'm having with people, an agent might be guiding X amount, and in this market, I've noticed it hasn't sometimes meant a whole lot, where a property might sell well and truly above guide, or maybe around the guide, but you just don't know. Best thing to do is don't worry about necessarily what the guide is. Look at what the property sold, other properties have sold for. So look at all your comparable sales. Look at basically other similar properties in the market, because then you can make your own educated decision and go, look, I think it's worth X amount. So therefore, put a strong offer and around that sort of ballpark.
100%. Look at it that way. But also, if there is you and another buyer on the same property and you're both seeing value at the exact same mark, but you're afraid if you go in higher than the other offer maker, you're afraid of overpaying.
Yeah.
Traditionally in Northern Beaches, overpaying doesn't really exist. Whether it's 2 weeks down the track, whether it's 2 years, you're always making your money back and then some on the Northern Beaches market.
The difference is you're securing it for yourself. So at the end of the day, when you're buying for yourself to live in, exactly like you said, Zac, if you're paying 1 or 2% over maybe what you think that property's worth, chances are it's going to be taken up by market growth, whether it happens short term or long term after that. But there's other things as well when you're offering an on property also. So when you're offering, there's multiple sort of levers that you can pull when you're talking to a prospective vendor, when you're trying to put forward that offer. And there's the price and there's your terms.
Yep.
So when you're putting forward an offer, you can obviously put forward X amount, but actually ask the agent as well, what's the owner looking for? Are they looking for a longer settlement, shorter settlement? Are they potentially, like if you're in a position to, can you offer with a call off, or can you offer unconditionally so?
Well, what does an unconditional offer look like? Like, I hear agents sign around the lingo like, you need yourself a 66W.
Yeah.
You need the unconditional.
What's that mean?
What is that?
Yeah, exactly. So as a buyer, when you're purchasing a property, there's two different ways you can go about it. You can either offer with the cooling off period, which means that you sign a contract, owner signs a contract, you put down a 0.25% deposit, then you do the exchange. It locks the property in for the next 5 business days. So that means that the owner can't change their mind, but you as the buyer, you can do all your due diligence, go through it all. And then if you want to, at the end of it, obviously you proceed, you put down your 10%, or you can still rescind, but you lose that 0.25%. On the flip side, there's the unconditional sale, which basically means you do all your due diligence beforehand, like buying at an auction. And when you sign those contracts and the 66Ws basically put forward, then that way you exchange unconditionally, full deposit, the property sold there and then on the spot.
That's it. And the deposit's variable as well. It all depends on what you negotiate with the agent and the owner themselves.
Yeah.
But most of the time, your standard deposit's 10% of the purchase price. But you can actually see, and we've seen it quite common in recent times, 5% deposit. As the sale prices go up, it's a bit hard to always have your hand on 300 grand to go. So you can negotiate a 5% deposit in there as well.
Especially if you've got a good broker and you don't need as much from the bank as well. So the other side of things also, so when you're putting forward an offer, our best suggestion is, first of all, you want to move quick in this market. So like we said, you got to make sure you have those good people in your corner so you're ready to pull that trigger. When you do, put forward your price, ask the agent what terms is the owner looking for, because if you can, try to accommodate those terms the best of your ability, because not all owners are necessarily looking for the biggest price. They might, non-negotiable, need a longer settlement because they need to find somewhere for themselves to buy. There's all these other things as well that you can try and sort of prop up your offer to make it more enticing for the owner.
Yeah, exactly. And we're seeing it more and more with the uncertainty as we were leading into the Christmas period. A lot of people, when we were selling kind of a couple of months ago, a lot of people just wanted that security that, yes, they'll be in a new home for Christmas, but they haven't found that new home yet. Like, yes, they want to sell, they want to take advantage, but they're not sure where to go. So settlement is actually a very fluid set date. Like even when you're in discussions, that date can sometimes vary a couple of days.
Yeah, exactly. And this will sort of lead into also selling this market as well, because what we're finding now is, well, the market's changed a lot over the past sort of, let's say, 4 weeks. Every single month so far this year has brought a new type of market to it.
Yeah.
And this past month, there's been a big change as well, particularly with the amount of properties coming onto the market. So
well, that's it. Yeah. It's been a crazy increase at the moment. As of about kind of midway through September, we started seeing a positive growth. There were about 50 properties a week across all the northern beaches.
Yeah.
And those 50 properties coming on, and you'd see about 20 to 30 sell a week. Now, I know in the past week, we had about 100 properties come on in the past week.
Lot.
It's a lot of property. But the days on market's only about 7 to 10 days. So you want to get yourself familiar with the area before you start looking in there. So you're comfortable knowing you're going into a good spot, because there really isn't that much time in such a kind of a hot market that once it's hitting the pan, it's going.
Yeah, exactly. And that's the thing as well. So it was so hot that even with that new stock level coming on, it was being chewed up as quickly as it was put on. In saying that, now that we're seeing those stock levels sort of increase, we are starting, from my opinion, I'll be curious to get yours, but we're starting to enter into more of a balanced market, and we're always heading that way at the end anyway. Nothing lasts forever. It's not like the growth we're having was going to go on forever and ever. It had at some point stopped.
It couldn't go like that forever and ever.
Exactly. And look, I don't think it's stopped just yet, but in saying that, that curve of going up so steeply before is starting to, in my opinion, flatten out, and I think we're starting to hit that next phase of more of a balanced market.
I agree with you there in a way that the house increases actually hit about this time last year. And that's when they hit their initial boom. And we saw that carry on, just crazy over reserve, just bouncing those big prices all the way up until about kind of mid this year, I'd even say, like June, July was when we started seeing those high house prices kind of level out almost. And then we saw the apartments play the catch-up game, because you can't always have a massive jump from your 3-bedroom apartment to your entry-level house. It all has to stay relative to each other.
Exactly. And that's the thing sort of leading into selling this market as well, with the increased stock coming on. And we're saying this to a lot of our vendors also. Over the past months, you've been selling in isolation as a vendor. Now you're going to start to sell in competition. So there's more properties similar to yours that are going to be on the market at the same time. And it's not doom and gloom in that regard. All that it means is, let's say, for example, a property was selling for $2 million 2 months ago. Last month, the same property sells for 2.2. This month, you're hoping it's going to sell for 2.4. All that means is if last month sold for 2.2 and it's a very similar house to yours, you're probably going to sell for 2.2 as well. And the market's just going to flatten out in that regard. And it's great in terms of, because as a seller, it's all relative as well for a lot of our families that are selling, where most people, if you're selling, you're actually buying in the same market as well. So yes, you may not be setting a new record with your home that you're selling for. You're still selling at a great price, a record compared to 5 months ago, but not a record compared to yesterday. But that means also when you go out to buy, you don't have to pay a record to get back into the market.
Well, exactly. As the old saying goes, as long as you buy and sell in the same market, it all stays relative to each other. Like if you're selling for record prices, you're buying for record prices. You can't. it's a bit of a gamble, and sometimes it's too much of a gamble. You try to sell at the peak and then you hold on until it drops. But Northern Beaches markets proved it time and time again. It doesn't ever truly drop.
It might have the little, when we hit like a peak, we might have a little come off the peak and a couple % drop. But overall, when you look at the overarching numbers, it's still increased by a lot. And that's the thing. So when you're selling there, you want to make sure you're buying and selling the same market. In saying that, I've noticed that a lot of our investor clients are actually coming to the market now as well. And I think that started that push for all the stock coming on, because investors before going, well, it's great, my property's going up in value. Now that more stock's starting to come on, it's almost like a self-fulfilling prophecy. The market's hit its peak, therefore I should sell, which also forces the peak to happen because it can't go up because all the stock's coming on. So it's very interesting that all those investors are selling.
100%. It's interesting times kind of set ahead. And if you are looking at selling, as long as it all stays relative, like my best suggestion, if you are looking to sell, you don't know where you're going to move, is just put that long settlement on the front page of the contract.
Or even if you don't put it on the front page, let your agent know. So you can have a standard settlement on the front page of the contract, but say to your agent, look, I'm ideally looking for a 3-month, 4-month, 5-month, 6-month settlement. And from there, basically, when we're negotiating with the buyers, we secure that long settlement for you. It gives you time to go out and buy. 100%.
And Mark's just asked a question. With more properties coming on the market, will it affect houses or apartments more, you reckon?
That's a great question. This is my opinion. I think it's going to affect both percentage-wise quite evenly. I think like in any market, the run-of-the-mill stock standard homes, stock standard apartments, for example, like your bread and butter 2-bedroom units in DY, or your sort of entry-level homes, they're always the ones that seem to boom the hardest or potentially bust the hardest. As opposed to your premium stock's always going to do well. So I personally think, to answer your question, Mark, the increased stock levels, I think for your less unique apartments and less unique houses, I think they're going to be ones affected the most. I still think the cream of the crop, the top-end houses, or the quite desirable unique apartments, I still think are going to perform strongly.
I've got a bit of a flip side on that. I do think it will affect apartments a little bit more than units. I think units have enjoyed the peak, don't get me wrong, and the climb that they've experienced over the past few months. But especially for buyers looking to jump into the market, I don't feel like entry-level apartments are at that stage of being $1 million yet. And I do think an influx of stock, especially if you're looking at a suburb like DY, very apartment heavy. You're looking at a suburb similar to Freshwater, and some of those pockets, it's very apartment heavy, and they're all nearly mirror images of each other at that as well. So I think it might affect apartments because it is a little bit harder with restrictions on sizing, where it sits in a block's location. It's restricted to make it stand out above the rest. And I do think they'll get hit a little bit harder than houses.
Very true. And Mark made a great comment there. Zach's mum's watching and wants to know how she made such a beautiful boy.
So my mum always has a saying that 2 wrongs do make a right, and that's how I got made.
Well, you are a great-looking chap, Zach.
Thank you. Mate, you just about yourself. Helen and John did a great job. And so 2022, this time next year, I want you to take a stab. What do you reckon we'll be looking at?
This time next year, I reckon across the board, we're going to be about 10% higher than where we are now.
10% higher?
10% higher, aka I still think there's a bit more room for growth, but I don't think it's going to be anywhere near what we experienced in the past year. I still think the fact that a portion of the market which wasn't there before was international buyers.
That's true.
Yes, we're not that international buyer heavy on the Northern Beaches compared to other areas, but it's still that flow-on effect. If lots of other international buyers are buying out of area around Sydney, it still pushes people to the Northern Beaches market. It's still more people in the market. So I think that's got a strong effect. I think some of the changes they made to the lending, which we haven't touched on as much as well, tightening up the lending a little bit.
Well, just a quick summary. What changes have been made to the lending?
So from my understanding, it hasn't been a major change, but when you're borrowing from a bank, at the moment, let's say you're getting a 3% interest rate from your bank, they normally add a 2.5% buffer on top of what they think you can afford to make sure that you can afford it, let's say, at 5.5%. They're now pushing that up to an extra 3% buffer. So an extra 0.5%. Doesn't sound like a whole lot, but all that it means is, bottom line, you can't borrow as much money, which obviously makes sense that it's going to slow down how much the house price is going to go up in turn.
For the people always borrowing at their cap. It'll just change the cap.
Which I think a lot more people are, considering how expensive everything is.
Well, that's it. Especially locally on the Northern Beaches, it might affect other areas across Sydney differently, but on the Northern Beaches, it might kind of slow the increase a little bit.
Correct. And I understand the philosophy behind it. You just don't want people to overstretch themselves too far. So I think a healthy buffer is definitely great as well with it. So based off that, a few factors pushing back and forth, I still think there's a bit more growth to go in the market. But in saying that, I think it's going to be much more moderate than the past year.
Yeah.
What are your thoughts?
And stock levels. So we're sitting at 611 at the moment. You want to throw a ballpark figure? Exactly how many properties on the Northern Beaches will be here this time next year?
Okay, so give everyone an idea for stock levels on the market, and Zac actually printed out some data before on it. This time last year, what were we sitting? How many houses and apartments were for sale on the Northern Beaches?
I don't have the exact breakdown, but I know at Christmas last year, we were sitting at 340 properties across the Northern Beaches. That is half of what we are at today.
So today we're at 611 properties. Yep. There were about 340, which is drastically lower. And then you think about now, yes, there's more properties in the market, but there's still not a massive influx amount. What we've seen in the past is on the Northern Beaches, if we start pushing over 1,000 properties on the market, that's when you're starting to see an oversupplied market.
Well, that's it. So you look at how many homes there are across the Northern Beaches. If 1,000 for sale, that's when you can start looking like, hey, market's flooding a bit.
Exactly.
But we're still sitting at 500, 600, which is relatively nothing.
Yeah, we're still on the low side. Exactly. And that's why the growth is still pushing up, the simple supply and demand at the end of the day. But what are your thoughts for next year then? What would you say?
Ooh, I reckon there will be some changes coming up because I just don't think. I think we'll sit at a higher stock. Mm-hmm. I don't believe we'll be over that 1,000 mark. I think we will be sitting at a healthier market, probably about that 850 mark.
Yep.
Anywhere in between that 800 to 850 mark with some new developments finishing up as well. Just in DY locally, you've got kind of the new one up in Havana and Del Mar behind us, which just sold out. Yeah. You might see some resales and people trying to flip for profits.
That's true.
I do think we'll see an increase in stock.
Yeah, because when you think about it, like a great example, the Meriton Lighthouse building in DY, when a lot of those were selling from 2017 onwards off the plan, some of those prices people thought at the time were massive, like big premiums to the market.
Well, they were big prices at the time.
But they were big prices, and people thought, oh, if I'm buying at this premium price for the market, I'm really restricting my capital growth here.
Well, that's it. And it was off the plan.
It was off
as
the
well.
plan.
They couldn't see it. They couldn't feel it. And they were like, this seems like a little bit too much money.
Yeah, and this is a great example of it because the past 2 years, they probably were relatively neutral to where people bought them. This year, however, the premiums I'm seeing some of these apartments for, some of our clients who bought in there like 3-bedders, 1.2, 1.3 million, they bought for and now transacting closer to $2 million. And that's all happened in the space.
Well, that's it. You look at the entry-level 1-bedders, even if you're going off percentage, they were selling for what, low sevens, mid sevens?
Yes. Yep.
Now the entry-level 1-bedders in Meriton are selling 900,000 just over.
Which is just,
like, it's just nuts.
It's big money. So when you think about that, like, it just shows that when you're purchasing a property, as long as the property is not going to fall down, yes, some property purchases are better than others, but being in the market full stop, and as long as you can hold through the bad times, the good times will be ahead. Whether it's 1 month down the track, whether it's 1 year, 10 years, 20 years, the longer you can hold, the more you're going to insulate yourself against any house drops or booms, and you're going to do well and make money.
100%. I agree with you. So those are our kind of hot tips for the market and a bit of these crazy times that we're going through.
Our thoughts, but guys, any questions on it as well, please feel free to pop it through. We're happy to answer any questions afterwards also. And then,
well, that's it. We're both contactable every time as the age
24/7.
As the age-old saying goes, we never sleep here at Novak. So
that's it.
Feel free to reach out at any time. And in the meantime, enjoy your evenings.
Awesome. Thanks, guys.
Thanks. See ya.